cost behavior. Variable cost. A cost which tend to follow, in the short term, the level of activity. Fixed cost. Fixed costs are time-related and, within limits, are unaffected by changes in the level of activity. Or, a fixed cost is a cost that a company must pay regardless of level of output. Or, fixed costs are costs that do not change when the quantity of output changes.
Semi-variable costs.
A cost contains both fixed and variable elements, and which is partly affected by fluctuations in the level of activity. A typical example would be electricity bill, which have fixed charges for the min level used and variable for the actual electricity consumed.
Step costs, semi-fixed.
These are costs which remain constant for a range of activity, then, when activity increases further, the cost had to be increased by a significant amount. A typical example would be supervision costs. Additional supervisor needs to be employed once production exceeds a certain level of output. Relevant cost. Any cost relevant to a decision and will change based on decision making. The cost can be avoided if decision is not chosen. They are future cost. Incremental cost. Additional cost that a company incurs to manufacture an additional quantities of output. Example is an additional cost of producing extra 200 units. Avoidable cost. An avoidable cost is a cost that can be eliminated by not engaging in or no longer performing an activity. Over the long term, all costs are avoidable. Opportunity cost. The value of the best alternative foregone. Or, the cost of chosen plan of action is the profits foregone from the best available alternative. Sunk cost. Sunk costs are those costs that have already been incurred, spent, paid. They are past costs and irrelevant on any future decision making. Thank you for watching.